Hello, everybody. My name is Mushir Ahmed. I'm the founder of Finstep Asia. Finstep Asia is a digital assets and fintech advisory firm. We are collaborating and supporting the Bharat Web3 Association in terms of running the podcast series, bringing in experts from across the world, talking about key themes and projects that are in the limelight and in the spotlight when it comes to Web3. Today, we have three distinguished guests who are deep in the real world asset tokenization world. We will go through an introduction and they will talk about their companies as well. Just to give you context, tokenization in terms of real world asset tokenization has picked up a bit of pace over the last year or so, largely driven by institutional adoption on one end, but also regulatory frameworks coming in major markets, including in Hong Kong, UAE, Singapore, as well as in Europe, where you do have clear regulations around RWA and major institutions going in. For the uninitiated, real-world asset tokenization is essentially putting a real-world asset, such as property, could be any other, like a car or any physical asset, or financial instruments onto the blockchain. So that's where the tokenization element comes in. And then you could have a fractionalization where you break it down into multiple pieces. Not all tokenization leads to fractionalization, but all fractionalization on the blockchain is through tokenization, right? And we are seeing more progress in different areas that can be across multiple industries. So I will stop there about this overview, but we'll go through the introduction with each of the speakers, their organizations, and what they are seeing in the evolution and impact of tokenization, in particular on financial services. Starting off with Devika.
Hi, everybody. Looking forward to the conversation and super excited to be here. I'm Devika Mittal. I'm the regional head for Ava Labs for South Asia. Ava Labs is the company that supports the Avalanche ecosystem and the Avalanche Layer 1 network. So if you look at most tokenization use cases live right now globally, most of those are on Avalanche. So very excited to be here, super excited to hear Scott and Manish's perspectives as well as your side.
Thank you. Scott?
Hi, Mashir. Good afternoon, everyone from sunny Dubai. So my name's Scott Thiel. I am the co-founder and CEO of Tokinvest. So we are a VARA-regulated real-world asset tokenization broker-dealer. So in the business of creating, distributing, and facilitating trading of regulated RWAs. Fantastic to be here with you all.
Thank you. Manish?
Hi, everyone. This is Manish. I'm co-founder of REALX. We are a platform for fractional ownership of properties. That's how I generally define that. Under that, we have two modes. One of the modes to invest in properties is through property tokens. These tokens represent secured digital rights over the asset directly. So, yeah, and our scope has been, so far Indian jurisdiction.
Yeah, so we are covering 12 time zones in at least 12 hours. I'm based in Hong Kong. Devika's right now in New York. So, and then you have India and the UAE in the middle, so almost covering all the major time zones. So this tells you how global real world asset tokenization right now is and where everyone's exploring it in the major jurisdictions. And this is a question or a thought that anybody can jump in, feel free to. In terms of why do we need tokenization, right? What is this drive that's bringing in the need for tokenization in today's world? Have we reached maturity in the blockchain? What do you think is driving this need for tokenization? Who wants to go?
I'm happy to jump into the silence. So for us, at Tokinvest, this is all around democratization of access to financial services, both for asset owners who are looking to find new and interesting ways of raising capital against assets. And while, the traditional financial services industry is huge, there are somewhere in the region of $600 trillion worth of investable grade assets that are currently not serviced by traditional finance. And on the buy side, the vast majority of financial products are not available to people who aren't, well off. They're called accredited investors or qualified investors. And so the ability of this blockchain and the associated regulatory frameworks to provide new and interesting ways for people to raise capital against assets and for investors of all classes, including retail investors, to participate And so that to me is really the evolution and why it's such a fundamental, importance to kind of the fabric of humanity, actually, because when we see the sort of wealth divide that's been continuing to grow, we very much see this as a leveler and, through democratization.
So I'm going to be like, this concept of blockchain democratization, access has been something a lot of crypto hardcore enthusiasts have been speaking about. I'm not necessarily going to push back on it, but I'm going to question what makes the blockchain as the key digital layer that's enabling it. Why do we need blockchain and why not your regular technology rails? Like Manish, you've been in this and you've been looking to do tokenization of multiple things for the last 10 years in a very regulated and formal way. Why can't we just do it on regular rails? I mean, there's a lot of online trading, securitization, etc., land, everything. There's a significant number of things are digital. Why the blockchain?
Yeah, so my answer to that would be first not defending the question. So I have a very different view to the early question that we need why do we need tokenization? And there the slightly different answer that I can give is maybe we all believe that this is to be done, the democratization and all that part, and maybe everybody would share that belief, but it's a tough one to actually make that belief into reality with real world investors who are not investing in case of RWAs. We don't promise the crypto returns, right? So the non-crypto returns with a crypto, let's say, blockchain base. So when you say that, there's a lot of learning curve, there's a lot of new UI, UX, that they have to go through. And that's a lot of journey that's, the investors, are supposed to undertake for what is a difficult question to kind of explain to them, kind of stuff. So having said that, I'm happy to share a hack that we had developed that, and we were selling essentially land to the whole old land investor guy, but with a difference that he will hold it as a digital asset now. So that was an interesting one because he's reticent, he's scared that this new guys and these guys they shut down shops every day, so kind of stuff. And then there's a new knowledge curve that he doesn't feel very confident about. And that point, one of the reluctance really came on what is this DLT account and why do I need that? And in that sense, we had to explain people, you open Demat account, you open bank account, you open DLT account for blockchain, access. And so we had to kind of simplify the whole thing, kind of relating your to your question that, the question does come to the customer's mind that does he really want this? And therefore, when you said that, why do we want this, from the customer view, this is still a question mark. Do you really have to go through all this to save 25 words as password, equivalent, if I can just say, to type in and key in those many words? Now, these are user experience hindrances, so do they really want it? Probably they don't have a choice. We gave it to them. We definitely want it because we see the world like that.
Okay.
So
Devika, your build, Avalanche is a well-known blockchain layer, right? It's about the technology, it's about driving the adoption and use. So what are your thoughts on this from that angle?
Yeah, I think when you look at blockchain, right, I think you have to think of it as a technology that's very powerful and that can enable a lot of things that perhaps cannot be enabled in the same way using other tech. So to answer your question, Saeed, I think, can you tokenize on other tech? I think you could. But could you do it in a way that's immutable? Could you do it in a way that's transparent? Can you do it in a way that, you're actually imbuing the code with certain functionalities? Like, I don't think you could do that at scale in a way that you can with blockchain. So, for example, with layer one blockchain that you're building on Avalanche, you're controlling the layer one, right? You're controlling the code, you're controlling the platform, but you're putting into it already, for example, KYC requirements, AML requirements. You are already putting in, mandates that somebody can't steal your land. Like blockchain is recording who owns that piece of land, for example, or owns that piece of, anything, real estate, or whether that might be air or whatever it is that you're tokenizing. So I think, can you do it without blockchain? Yes. Can you do it as well without blockchain? Probably not.
I'd like to jump in as well, Mashir, and just offer an example of something we're working on where I think the reality is without blockchain, it isn't possible. And what we've seen with, we're not a crypto company, but I think what we've seen with crypto and DeFi and the manner in which financial products have operated using crypto assets as collateral is very instructive for where we're heading with RWAs. An example I want to share is if you go and try and secure a loan today, a traditional financial loan against something like a piece of real estate, which is a classic use case for RWA tokenization. The first thing that happens is they ask you a couple of questions about the asset and then a whole lot of questions about you as an individual, which is really interesting because if you look at the way DeFi lending works, they don't actually even necessarily need to know who you are. They need to be comfortable about the asset and that the asset represents adequate collateral for the loan. And what that also enables is once the lender is comfortable that the asset provides adequate collateral, the technology enables that asset to be locked. The smart contract can be locked, providing unmovable collateral. And the real difference there is because the thing of value sits in the token, as opposed to traditional finance, where the thing of value might sit in pieces of paper or bonds or registrations that have to occur at land registry in the form of mortgages and all of this kind of manual process. So the truth of, we're looking at a world where real estate tokenization, investments that can happen on our platform will, at the click of the button, be able to include a level of, the equivalent of mortgage financing, but literally at the click of the button at the point of purchase with no more AML KYC requirements. Now you compare that to the traditional process today. That's a good example, I think, of how this technology is simply going to enable things that today are either not possible or take weeks and, endless meetings and bits of paper. And all of that obviously gets paid for by the underlying consumer and less good products. So I just wanted to cite that as an example of how I think this technology is going to fundamentally change what's possible.
So have we reached maturity? We feel we are mature enough now to do things at scale, have the right security, and be able to comply with KYC, AML, regulatory requirements where they are, right? I think we're starting to see that in parts, but is that scale across the major centers? Manish, you sold something at very large scale recently in India. What convinced the regulators eventually to allow you to do what you wanted to do after so many years? And how did you execute at scale?
So in my case, what I have always maintained is ignorance of the law is not a safe place to be in. So ignoring the law that, and assuming that the law will follow course and, the law will come around creating bridges where you stand and you can stand on an island. So if you want, that probably is not the best strategy. When you're building products, we have a lot of choices in which, the same objective can be met. In pursuit of those choices, we must come closer, as close as possible to established norms, prudential, methods, which the regulators, etc., understand, things that adhere to the to the laws of the land. You see a lot of KYC, etc. discussions today when it was, go to COVID days and they were still talking anonymous, and anonymous is the reason why we exist and that is how it should be done. That has given way to KYC and it has very, very easily kind of gotten adopted. I think KYC was a no-brainer acceptance that should have been there. If you ask me, anything that requires better acceptance from the world probably would need that. Now, probably the discussion would have been around something like KYC being shared with whom, consent, things like that. Maybe that was a discussion to be done, but we started at the wrong foot, which got a wrong response and things like that. So one thing that worked for us was working and building every platform that I have built with the regulatory understanding that, these are things that they understand, these are things that they would want. and figuring out, at least I can say English common law jurisdictions have a, law is a very wide subject. There are many things that are said, unsaid, left, unsaid within the law legal ambit. If you research well enough, you are able to kind of figure out gray zones, but which are favorable or which are at least, clear in law. So those, if you build with those approaches, I think you're good. That is what my, summarized statement would be.
Others, any thoughts on the scale and maturity?
I'm happy to.
Guys, I've done it in India, so I think there's some modicum of smile that I can share with you guys. So if you can do this with India in India, then I think it's doable on lot many other places.
The driving in India analogy. Scott, you were saying?
Yeah.
Yeah, look, I mean, I think I have a very unique position, as you know, Mashir, in that I've relocated to Dubai and been very actively involved in the development of what I genuinely believe to be the most advanced virtual assets framework on the planet today, by some margin, in fact. And your question, I think, originally was, are we at a level of maturity to support scale? And this is what you're part of the VARA regulatory team for a while. You're inside there seeing what was happening. Only last week we've seen a substantial refresh of that regulatory framework, with a particular focus on issuance of RWAs, or asset reference VAs as they're known in VARA speak. And it's an absolutely comprehensive regime. Whether it's AML KYC, whether it's investor disclosures, it's the type of regulatory framework that you would expect in terms of its breadth, scope, investor protections, and operational kind of requirements and reporting from traditional financial services frameworks. But it's been uniquely built with virtual assets in mind, and the nuances and aspects of the technology that are different from TradFi. So I think we absolutely have a regulatory framework that is now completely mature enough to deal with scaling this. Perhaps more interestingly, and if people have been watching, we now have fractional land title in Dubai. So the Dubai Land Department has now enabled the tokenization of the land title itself. So this is fundamental, because historically, fractional ownership of indivisible assets like real estate required the asset to be held in an SPV or a fund structure or another legal wrapper like a REIT. What we can now do, and this is now been, the pilot phase is now operational. First issuance has been done, and we're looking forward to participating in this in the coming weeks and months on our platform. What we can now offer is a structured product that represents rights in real estate, but individual token holders will actually be an owner of a fraction of the land title. So there's no need for an SPV. Everyone with a token, in fact, has a piece of title. That title will be tracked and recorded at the land registry, just the way that whole titles are today. And when it trades, it'll automatically be updated. So that technology integration into this most promising of asset classes is now completed here in Dubai, which is an extraordinary achievement.
So we basically now moved to that stage where it has reached maturity in terms of regulators understanding it. You have the maturity in terms of technology, and now you're getting the big players. Devika, Avalanche and Ava Labs has been working with some very large institutions as well. What are you seeing from them? What's attracting them to say, hey, we are now happy to use this technology? I mean, of course, we've had BlackRock come in and say, okay, we're happy with the asset. So the Bitcoin as an asset, great. But what's making the others, especially non-traditional finance institutions, look at blockchain for RWAs?
Yeah, I think, there's two things that really drive this adoption. The first is, when you look at, say, large financial players or institutional players, enabling tokenization on blockchain allows them to actually have access to alternative markets, right? Whether that is crypto tokens like Bitcoin, or it is, for example, with Scott's example, like fractional ownership of land in different parts of the world, right? I think putting things on blockchain is really enabling like access at a more democratized level, if you so to speak. And I think the second is that I think it actually lowers the barrier to entry for investors as well. So, for example, if you look at KKR's $4 billion healthcare fund, you know, the minimum ticket size for an investor to come into the fund actually has reduced significantly once they've tokenized their assets and the fund on blockchain, because a lot of the regulatory compliance requirements are kind of automatically being met when somebody onboards on blockchain. They don't have to have so much overhead. You know, it's a cleaner, faster, simpler process for them as well. So I think when you see it from the perspective of like, is it easier for the institution, and are they getting access to more assets? That's when, and they're seeing that there's, you know, security, auditability, etc. I think they're feeling comfortable entering the tokenization space in a big way.
And I want to move the conversation forward in terms of, and I think it's at the stage where we can also talk about when institutions are coming in, what are they looking for? You know, three of you also mentioned this, you know, in terms of access is important. Being able to find ways of reaching new investors or the investor class in some senses. It works both ways. And number three is also the maturity. We've reached there. Where do we expect the market to move next? Are we going to see more of a consolidation around certain use cases? I mean, there's a large conversation around real estate, of course, right? And that was among the earliest ones. In some senses, when I look at it, I look at an apartment as a token, as, you know, fractionalized piece of property as well, right? Where you're getting a small piece and it's a representation. You're never owning the land effectively enough. What are the other things that we feel this can go into in the near term? And I'm talking about a year and a half, where we can see more progress of RWA tokenization beyond property and maybe securities in terms of, say, financial bonds, etc.
Yeah, John, we did a report, a thought leadership report back in January entitled "Where Are All the Tokenized Assets?" And the reality is, as at today, the vast majority of RWAs, and I'm not including stable coins in that category. Sometimes people do, but the reality is the vast majority of those are represented as of on-chain private credit. You know, the stuff that's happening in the US in particular. Then there is, you know, US treasuries and BIDL funds and things like that.
Yeah.
And then there are tokenized commodities, gold tokenization. That actually is the overwhelming majority of what's on chain to date. And I think we will start seeing a lot more of that. If I look at the asset pipelines we have, there's a lot of commodities, particularly the commodities that don't benefit from having existing, you know, liquidity solutions and venues today. Real estate's going to come along, but real estate's actually pretty small. The reality of, you know, real estate tokenization today is it's quite a small asset class. It's got such huge potential, but the regulatory complexity, because it's an asset that sits in land registries already, makes it quite complex. But I think we're going to see a lot more private credit, private debt, private equity, and more commodities.
What are you seeing, Devika? Besides, you mentioned about the KKR use case, what are the other things that you're seeing pick up in terms of builders or issuers of RWAs on the Avalanche blockchain, or what do you expect over the next year or so?
Yeah, I think kind of echoing what Scott is saying, I think you're going to see a diversification of assets that are being tokenized. I think what I'm particularly excited about is still real estate, especially in the Middle East. So we're, you know, speaking to a few projects and a few companies which are major real estate players in the Middle East, you know, very large developers that are looking to tokenize both their commercial as well as their retail assets on chain. I think that is going to be a big move, because that will be about, you know, that'll be billions of dollars, right? If not tens of billions of dollars moving on chain. Of course, there are other alternative investment assets that you'll see. You know, you'll see everything from identity to you know, alternative funds being tokenized. But I still think that real estate is kind of the killer use case here.
Manish, what are the things you are seeing or you conceptualize beyond the real estate?
Yeah, I don't need to, you know, somebody told me that even if you concentrate on Mumbai itself, you will be $1 billion company by itself. So that's how narrow the real estate itself can be in terms of what it can make or break. You know, just going a little deeper, Mumbai is, you know, there's no land. So Hong Kong, there's no land. You know, Singapore, there's no land available. So you're talking about redevelopments, and redevelopments is money when you buy. So there's a lot of potential, and this from where we see real estate is not real estate. It's when you go deeper, there's a lot of difference between, let's say, a vacation rental or a redevelopment, or a farmland, or as we are now working on data centers. So,
Yeah.
so anything that is real estate, we categorize as one, but probably it's not. There are real estate based active investments, like data center converts it into an active investment. And there are as passive real estates as gold can be. Just barren land. Kind of stuff. So we see real estate as at least 12 sub verticals within real estate, and each of and specializing, capitalizing on each of them is a very unique skill. We need to remember that when we're talking about any real world asset, there is a digital asset that needs to be managed, the whole ecosystem wise, and there's a real world asset also that needs to be managed. So when you're talking about receivable tokenization, you're also talking about receivable as in the traditional sense of receivable. If you can't do that, if you don't have laws to do that, if you can't have your engine doing that very well, the token system will fail, kind of stuff. So from where we see, every asset has a huge ecosystem, and we as platforms need to understand that we need to manage both sides, of
Fair comment. Yeah.
the digital side as well as the real side. So that's dragging us as well. I'm having to manage perimeters, boundaries, security and things like that also, as much as the evolution of blockchain and multi-sig and the two-factor authentication and things like that.
You see all of these come in together, right? On one side, you're balancing as most of you are in terms of just the asset and what can be sold. I say a lot of times you can fractionalize a non-desirable asset, and you can break it into 100 pieces. If it's not desirable, doesn't make that much of a difference if you're fractionalizing it. And that's a good point you make, Manish, which is when we look at real estate, a lot of us think property in terms of houses largely, right? But there's commercial property, there is agrarian properties, and each of these have different use cases or desires. I think data centers is something we are seeing as in this region where there's more interest in terms of tokenization, as is, I think, in the Middle East.
Yeah, and I've been on data center, Mushir, and it has been taking us a huge amount of drain to kind of think through, on the data center side. And while we believe that in terms of the first question, democratization, this can be an amazing thing where, you don't only want the Blackstones of the world to be installing data centers. Probably public can participate, not just as a user of data center, they can also be participating with the wealth creation aspect of data centers.
Correct. And with the AI boom,
very complicated.
With the AI boom, this is just going to increase.
Yeah.
The other things we are seeing is, especially say mainland Chinese companies are exploring multiple ways. We're seeing things on in the battery energy field as well. So Ant International, for example, tokenized electric chargers. And so the yield on that. So one is the physical object itself or the asset itself. And I think the second is the yield or revenue you can generate from the asset. Other things have been tokenization of ships, which Evident Capital has done as well, of a LNG carrier. And commodities are definitely picking up, although gold seems to be the one that most people are most excited about.
One perspective I wanted to add there, Mushir, if I may.
Yeah.
Like countries like India, we have a different challenge as well as opportunity. So gold tokenization, we considered gold tokenization, and I wanted to share that insight. It just doesn't fly with tokenization because, you have digital gold available in India, and there's just no point at all. There's no economy at all that you can do with, tokenizing gold. The digital gold ecosystem is working extremely well. Similar case with, with us having UPI here, we just didn't have any takeoff for the CBDC because the payment system was efficient. The centralized payment system was working very, very efficiently, and nobody needed the CBDC, in that sense.
That's the whole thing. That's where I started off with in terms of when we're looking at use cases, why do we really need tokenization? In terms of, engaging, now here comes, we have use cases. So people are going to be trying to tokenize almost everything which we've seen, right? NFT is essentially where tokenization of a lot of digital art and other things. Devika, coming back to you, what do you think is going to be the key element to drive more adoption, especially when it comes to institutional players, as also driving community engagement for RWAs?
So I think when you're looking at driving adoption from the institutional side, again, I think this goes back to, what do institutions need for this to take off, right? I think institutions need reliable technology. I think so. For example, with Avalanche, you don't have to put your tokenized assets on our public chain, right? You can have your own private chain. You can have it be permissioned, right? So the people who are accessing that data are kind of fenced. The people who are validating that data are fenced. So I think for large institutions with very sensitive data, often that's not data they want sitting on a public chain, right? So can you get reliable technology that is modular, right, and kind of adjust to your needs? I think earlier with blockchain, we were trying to retrofit and force fit things into chains. Versus, I think now we're at a place where the chains are going to change based on what the need of the project is. So I think reliable tech is extremely important here. I think beyond that, what you really need is compliance with the government. Again, we're seeing this in Dubai, for example. We're seeing this happening in India. And I think the last one is, I think the institutions just need to see a market need for this, right? If there's a demand from the retail side or their partners, they're going to want to put in the effort and the tech build and the lift to implement this. Nobody wants to make an effort, spend tens of thousands of dollars building technology that they don't think their customers will want. So I think those are the three shifts that I'm seeing, which will drive adoption on the institutional side.
And what are you seeing from an ecosystem perspective? And I think that's a very good point that you've made. We'd love to hear your thoughts on not just across South Asia, but across globally when Avalanche is dealing with this. Because ecosystem, I agree, is a key element. If you don't have it, you could be very early on in terms of having a good technology and use case. But if the ecosystem is not there, it's going to be very tough to drive large scale adoption. So.
Yeah, I think this is kind of some of the part that, Ava Labs, for example, like the BT team, that's what we kind of look at, right? Is can we take our tech and can we show the power of that technology to large players, right? And then can we build that ecosystem over time? So, when you're looking at Avalanche globally, we're looking at everybody from lemonade insurance in parts of Africa to land tokenization in India to asset tokenization in the US to stable coins and working with the MAS in Singapore. You're seeing all kinds of different assets being tokenized globally. And again, I think over time, as more and more institutions participate, other institutions feel comfortable because it takes away the barrier to entry and understanding if your partners have done it.
Scott, you left a career as a very distinguished and established lawyer that was the corporate world to get into the startup world. With Toko and now Tokinvest. So I'm assuming there was something you saw in things changing, and now with the VARA license and other elements, a lot of what you do is with institutions. What are you seeing as the drivers for their engagement and interest?
Yeah, look, institutional engagement, I see two things. One is efficiency, where it's simply, can we use this technology to do what we're doing with traditional looking products in a more efficient way? And there's nothing wrong with that objective, but it's not really where I've been most focused. Where I think we're seeing some slightly more interesting perspectives, obviously other than stable coins, is around custody. Traditional firms, banks, for example, what do banks historically do? They've kept money safe. Well, now they're going to keep digital money and digital assets safe. And so I think AUC, digital AUC, as a kind of rising North Star for TradFi is an important driver that we are seeing for sure. For us personally, some of my motivation actually came from the sheer frustration of TradFi as a user of it and the limitations of what can be done and the clunkiness of the engagement model. And if I look at, the neo banks, we've got some really interesting ones. We've obviously got people like Revolut in Europe in particular, and WEO now in the Middle East. We actually look at what they've done, and the banking experience is very different. It's much less branch orientated. It's much more mobile app orientated and user friendly. we actually see ourselves as a neo broker, is the term we're starting to use. So we are kind of this next generation of broker that's providing access to assets. The Web3 technology on our platforms is largely disappeared. You don't need to have, blockchain 101 behind you before you can interact with our assets. I think one of the historical challenges for crypto in terms of mass adoption has been the clunkiness and fear of using the technology and needing to be, kind of crypto native and understanding phrases and wallets and all of these things. Well, we've kind of disappeared a lot of that technology under the hood. So what investors will get on our platform is a familiar Web2 seamless experience, just simply leveraging this technology to then bring better product to bear.
And Manish, when you're seeing, you had a lot of retail investors buying this, right? And you had success in that. What were the key concerns you saw in terms of the retail investors when they were looking to get into it, or how did you mask it, if at all, in terms of being like as Scott mentioned, more Web2 than Web3? Did you go that route, or what was the route you used to ensure that this...
So, I have a very different experience. So few hacks that we learned, how to sell better, even though you are Web3, and I'm saying even though you are Web3, is not talk about Web3 and things like that. Focus on the asset, focus on the returns, focus on all the real world, aspects of it. And once the customer, in our case, the investor is convinced on that, then he's more open to actually understanding how do you work out. And that approach has worked for us, and that is the standard operating procedure that we kind of follow. And as I said, we have to kind of dumb down every part to something that they're used to. So, for example, saying that instead of a demat account, you have a DLT account. So what? And it's a lot easier to do so. So we had to do that. Number three was, as I said, we need to emphasize more on the user experience part. So the crypto world, what they have done is they have overcomplicated, I think there was a time when there were wave of ICOs, there were new terms being coined almost every week that we all found ourselves lacking in understanding that. So while, for example, every or property deal that we do is a DAO, but I never talk about a DAO. I just say you have voting rights. So you don't say DAO to them to make them feel that they don't understand something. You come back to normalizing it and just say we have a different technology. In fact, over in India, what happened was, the crypto boys, as I call it, they had developed a very basic realization, not understanding that, blockchain is safe. And therefore, blockchain is immutable. How it doesn't happen doesn't matter, So that wave we also rode upon. So when we tell people that once the property and your rights are credited on blockchain, nobody, including us, can tamper with it. And that gives a very good sense of security, to people. So we had to kind of figure out our own hacks of explaining each part and dumbing it down, so
Okay.
that people kind of get it.
Same thing, right? So Web2 in terms of technology, keep it simple for retail investors. Don't talk too much jargon, right? We always, in the fintech world, as we spoke about, de-jargonizing so that we build in. So we're coming towards the close of our conversation. I want to probably talk about one other thing, which is DeFi, right? In terms of the pure DeFi, Deepin, as it's known, decentralized physical infrastructure, which is largely in the unregulated space so far. We didn't talk much about regulations, largely not diving in, but in most jurisdictions, you now have a regulatory framework for real-world asset tokenization, either through tokenization regulations in, say, Hong Kong, Singapore, UAE, as well as under MiCA, or retrofitting with the existing financial security regulations. But Deepin and DeFi elements are something that is coming up, and it's a very, not I won't say Wild West, but very different world. Any thoughts on that? Devika, what are you guys seeing from that perspective? Are people building DEXs and looking at more deep in on with Ava Labs or in the ecosystem? And any promise that you see in that?
I think to Manish's point, there's a lot of activity that's constantly happening in the blockchain space, and I think there's a lot of activity happening in Avalanche specifically when we're looking at this. So, I don't want to comment on this too much in depth, but what I will say is that naturally we're seeing iterations of all of these. Right, we're seeing people kind of flirting with the idea of DEXs for RWA assets. We're seeing DEXs for deep in assets. We're seeing we're seeing all kinds of products coming out and people kind of trying to hack solutions together. I think in the sense of taking it to the next level, right, where how does deepin or dexes work with tokenization. I think it's still early days for us. I don't think we found any stickiness, so to speak, yet in terms of solutions that are going to be adopted at scale. I think there's a lot of really upstart projects really trying to figure this out. Some are kind of global projects. Often I think, yeah, these are related to geographies. So I'm seeing some of this in India, I'm seeing some of this in the Middle East, we're seeing some of this in the US as well. I don't think the ecosystem is robust enough, unfortunately, for there to be like a very active DEX, for example, for RWA assets. I think we're still at the stage where tokenization has to be adopted at mass before there's a very robust secondaries market on blockchain. So I think there's some innovation, there's some testing, but I would say it's still early days for us.
All right. Scott, views? I know you had some thoughts around the regulatory elements, but
yeah, I mean, I think the problem with RWAs in DeFi is the reality that most RWAs are regulated financial instruments in most markets, and therefore rules around AML KYC, knowing who's buying them, knowing who's trading them, making sure they're not on sanctions lists, all of that stuff kicks in for those assets. The vast majority of RWAs in DeFi or deep-in environments today are probably operating in a grey area at best, shall we say, probably more likely just simply illegally. However, we are absolutely of the view that it is critical for the future of RWAs that this becomes a major part of the ecosystem. Why does TradFi only service so much of the world today? Well, in reality, it only services those things that have a habit of looking like a high velocity, highly liquid asset that's capable of trading on centralized infrastructure and capable of supporting the very high fees that are necessary to pay market makers to maintain tight price spreads on those exchanges. And the problem with that then is every single different centralized trading facility needs a different set of market makers, and having to pay them all to do this, which again just creates limitations on how many products can go into that environment. So we're working with an entity called Multipool, for example, that has it's a DEX, but it's a DEX with a fully on-chain limit order book, which actually allows centralization of liquidity through decentralized technology, so that anyone anywhere in the world participating with an asset on there can add their own order book to a shared liquidity pool, for example. Now, the regulations aren't there yet. The ability for people to have soul-bound tokens for digital identity that tracks into those environments is essential to hit the regulatory kind of minimum requirements. That doesn't really exist yet, but for us, this has to be the future of RWAs, because much of what we're trying to do is to unlock currently liquid assets. They're illiquid because they don't trade like an Apple stock or a Bitcoin, and they never will. And so we need to find different solutions for secondary markets, and we're pretty confident that's going to be next generation of DEXs and DeFi infrastructure.
all right, thanks. Before we close, any final thoughts on what you think will be one major product or asset we can expect outside of real estate in the next 6 months, which excites you the most? Manish, if you want to start first.
Yeah, I'm all in for real estate and the variants of real estate. That's very consuming. But yeah, as I said, if you can consider and imagine data center to be real estate, then or outside of real estate, then yes, we are already experimenting on let's say things that can be built on land, which can be variants of real estate. So and that there can be quite a variety. We got to consume the moment we stepped into data centers.
Okay, so data centers it is, Devika?
I'd be curious to see what Scott says first, and then I'll give my answer.
Okay.
All right, I'm going to throw the curveball, and it's a real curveball.
Yeah.
I think we're pretty close to issuing a tokenized racehorse syndicate product.
Sorry, what was that? What syndicate product?
A racehorse. So
A racehorse syndicate
fractional
product.
investment
Okay.
in digital form,
Yeah.
shared, not an ownership product, but a shared contribution and reward structure around a racehorse asset.
Nice. Very, very interesting.
You asked
Devika?
for something. You asked for something a little off the wall, so
Yeah, it
there's
is.
one.
It is interesting. Yeah.
Yeah, I mean, I think I think we're seeing all kinds of tokenized assets. I think one that we're having, which I'm kind of excited about, is the wine industry. Where can
Mhm.
you
Spirits.
can you invest in vineyards as well as in wines themselves? I think that'll be quite interesting to see whether that takes up in the rest of the alcohol industry, for example.
Yeah, you're seeing whiskey tokens as well out there as the other popular story. Look, for me, I think energy is going to be interesting. I did find the EV charging stations as an interesting use case, which I do expect to scale in countries like in mainland China. So yeah, thank you all. It's been a very deep discussion, can go on for much longer, but this is a topic I think which will keep, like fine wine, keep maturing, hopefully over the next year or so. And I look forward to bringing you back for a future conversation. Audience, thank you so much for staying with us through this conversation. This is the Bharat Web3 Association podcast, bringing you insights and educating you on leading topics in the Web3 space.